All right, everybody, welcome. It is good to see you this afternoon. Thanks for joining me. This is JJ Panzer, your Smart Apartment Advisor here. Another weekly call just to go over what's going on in the real estate market in San Francisco and the Bay Area right now as we are dealing with the first wave of this crisis and how we're responding. Good to have you, everybody. Thank you for joining me. Not too much new to report today. Rent payments are still where they've been. We've got about 36 people who are needing help out of about close to 500 tenants that we would expect rent from. We are getting a little bit of movement in the leasing of units. We have a couple of the more basic level apartments that have rented. We had a $2,500 ground floor apartment in a 2-unit building. It was a basement unit that got converted a long time ago. Not a truly palatial estate by any stretch of the imagination, but it went pretty quickly. And now we are working with leasing agents at J. Wavero Associates to help with the leasing to make sure that we have an active presence in the market and to try to get everybody that we possibly can to come out to our units to see if we can get them rented. So we'll be showing you a little bit more about that as we get some more feedback from our leasing agents on this one and anybody who has vacancies. You'll hear more about the kinds of people who have come to see your apartments and what their feedback has been. So we're working on that now, and we're holding prices steady. As time goes on, I think we're going to see that the prices are coming down. The latest reports have been somewhere between 10 and 20%. And I think the fact of the matter is that everybody's still sort of frozen in this place of feeling like, oh, rents are what they are. My place is worth what it's worth. And the market is going to determine what your place actually gets. And that's going to mean that's what the market is worth. And there just aren't that many people out there looking. And prices seem to have stayed more or less steady for the past couple of months. And I feel like people are starting to get realistic. And a lot of what our leasing agents are doing is, sniffing for the right kinds of tenants, the right people who have good, stable employment and who, have good reasons to be moving and encouraging them to apply and doing a little bit more negotiating up front before we get the application. In the past, when we've had a lot of demand for apartments, people would say, well, oh, you want, $3,800 for this apartment or $4,000 for this apartment, but would you take 35? And my answer to that has always been, well, why don't you apply and we'll see what your application looks like, and then we'll talk about it. Now it's a little more along the lines of, yes, why don't you apply for $3,500? That sounds like a great deal. Let's do it. And so, we're moving more quickly to reduce rents to lock in deals. We're getting more and more requests from tenants who've moved in the last year or two to reduce their rent. We are not really interested in reducing rent for people who have active leases. But for tenants who are on there month to month, we're certainly, open to the possibility of signing a new term. We want people to stay, and where there's a situation where somebody could potentially leave just over price, we'd like to have the opportunity to keep them, offer a free month's rent in exchange for a new term, or maybe less than a free month's rent if the market hasn't really adjusted that much. But one of the problems that you have is if you have a larger building with multiple very comparable units, you may end up in a situation where a tenant finds out what happened with the other rents in the building and is not so excited about the fact that they're paying more based on when they moved in. So, we're working our best on that. Coming up on Friday, we will certainly have an interesting update from Denise Ledbetter about our legal options with regard to the Preston anti-eviction ordinance. Interestingly, our friend Nicholas Paleologos has been on these calls before, he forwarded me an email that came in from Supervisor Haney's office, so he's District 6, saying that, they understood the concerns of small landlords, and they felt like this was the most important thing that they could do right now, is to make sure that people didn't lose their homes as a result of their inability to pay because they lost employment or income during the pandemic. And that he wanted to underscore that the fact that that they were making it so that people couldn't be evicted did not alleviate the tenant's responsibility to pay the rent. And I saw that and I went, really? So what is it that motivates somebody? I mean, I will say right now, our tenants have been wonderful. And the fact of the matter is that 94% of them, and I will say 100% of them, seem to be honest and true with their intentions. 94% have not taken advantage of this to do something untoward, to stop paying rent, knowing that there couldn't be an immediate negative repercussion like there normally would be, that we would immediately file a lawsuit. But the fact of the matter is, let's say the tenant acknowledges that they owe the back rent and they owe rent going forward, or they just acknowledge that they owe the whole thing. They start paying the rent going forward and they have a big past due balance. It doesn't mean the money's not owed just because they didn't have it. Now, I understand the technicalities of collecting, the practicality of collecting past due rent in that circumstance is challenging, but you could have a payment plan. There could be something, or there could be some sort of assistance. But to think that just because the obligation to pay it cannot be enforced, that people may still pay it, I think is problematic at best. I hope that people will pay the past due rent that has accrued this year. I'm not optimistic that without the ability to develop a payment plan and to file a unlawful detainer lawsuit and then have a stipulation for entry of judgment that specifies on these dates moving forward in 2021, you will pay these sums of money, or you agree that you can be evicted for non-payment of back rent. Yes, the honor system is great, but I'm not sure I necessarily want to rely on that solely in this circumstance. Now, one of the pieces of information was, gee, we're working on a system to provide support for smaller landlords, to give them some financial support to take care of the past due balances that are owed. But I'm not sure I necessarily trust that at the city level. I mean, I might trust it at the state level. But whatever they're going to do here in San Francisco isn't going to be, I doubt that it's going to extend very far, and it's probably going to come with an enormous discount and a lot of other strings attached, like, gee, you can't evict this tenant for the next 5 years. So there are all kinds of things that are problematic about this situation, and we'll have an interesting conversation with Denise about what we're up in for when we start dealing with the legalities. One other thing I want to mention to everybody, now that we're thinking about rent decreases, we're thinking about where the market is going. Remember, one of the things that keeps landlords in San Francisco and rent-controlled property from being willing to reduce their rent is that they're not sure, if they reduce the rent by 20% today to get something rented fast, they may never get a vacancy. And we've always relied on the vacancies as the way of getting your rents back up and improving your bottom line on your rental property. But as we move forward, and as the election rolls around in November and we've got Prop 10 2.0 on the ballot, this all could not come at a worse time, because with the possibility of vacancy control as well, the maximum rent increase that you could get even after a unit vacates would be 15%. And that would be after a tenant's been there for 3 years or more. So you may very well find yourself, if you reduce rent by more than 15 or 20%, not even being able to get that back when the unit goes vacant 3 years from now. And you may be stuck with that if the Prop 10 2.0 goes into effect. So I'm going to once again implore everybody, make generous contributions to the campaign to help the campaign to stop this awful legislation that's going to limit your ability to to run your business the way that you have for all of these years, and to take care of yourselves and your family with that income. So with that, I will turn this over to Josh, and he will give us his deal of the day. We've got an interesting one in Nob Hill, a 6-unit building. So let me switch this over to Josh. There you are. Hey there.
Good afternoon, everybody.
Hey there.
Can you hear me?
Yes.
Good. All right, I'm going to share screen here. All right. So this is an interesting deal. This is 6 units, Nob Hill on Jackson Street, between Jones and Leavenworth, priced at $3.5 million. What I'll explain about this deal that caught my eye, I'll move over to the photo here. It's a photograph. You have 1 parking space in the bottom level, obviously. 2 units per floor above. This deal caught my eye for 3 reasons, mainly. Cap rate, again, I'll talk about that. The renovated units in the building. So there's very little to do here. The exterior is misleading because it's a little beat. But the interior is great. So the majority of the units are renovated or undergoing renovation right now. And then there's an ADU potential that's both entitled and permitted by the city right now. So behind that, that garage here is storage space that can be converted now legally to an ADU. So I'll kind of talk a little bit more about that. Again, in this market, I'm still seeing buildings come out in 3 caps, in the 3s, sub 4 caps. I don't think there's any reason that you need to buy a building with that kind of return. In this market, I'm looking for 5+ cap rates. So this is 4.89 at list price. So again, I'm seeing opportunities in the 5s now, which is just rare. So I like that. There's a nice upside on the building to move up to closer to a 7 cap over time to getting the rents up. But as I move, I'll show you. We go down to the rent roll, and these are all 6 units are 2 bedroom, 1 bath. The bulk of the tenants, 3 out of the 6, moved in 2019, and they're getting excellent rent, market rent at $4,200 per month. There's 1 tenant that moved in 2005. That's the lowest paying tenant. There's always one, inevitably, in San Francisco. And then 2011 is also a little low, actually lower, strangely. But what's interesting here, so you have 1 vacant unit. It's currently vacant. The market rate on it is $4,200. It's being renovated right now. One thing I would do, I'd be hesitant to buy a building with vacant units right now for 2 reasons. 1, because of all the things we're talking about every day with the problems renting units. So I would probably make an offer contingent upon this unit being leased up in escrow, just because of the nervousness around finding tenants. Also, $4,200 a month is such a large amount of money in terms of what you can borrow. So your loan to value, you can get your down payment lower, your loan value higher by having that unit leased. So a vacant unit here, everybody normally is like, hey, vacant unit, great, I can go to market. In this, go to market and get the top dollar. That's also true. I'd probably pass that burden over to the seller to get it leased up. In this case, there's a parking space that's also vacant. That 1 parking space, they're listing it for $350 a month. You could rent it to whomever at $350 a month, or you could probably attach it to that vacant unit and get that rent up. So I think that's a good thing to do. I'll move now into the ADU potential, which could also be somebody taking that ADU could also use the parking, although probably not. I'd probably attach it to this 5th unit. So there's income there. So moving down here. So 2 things. So this building is on the soft story list. It has not gone through the soft story retrofit. Talking to JJ and knowing what DBI estimates, it's about soft story retrofit is about $12,500 per unit. roughly for the cost to do the retrofit. So in this case, a 6-unit building, you're looking at about $75,000 for the soft story. But what's nice here is you have an ADU entitled and permitted already on this building. So they're ready to go. So if you look at this existing floor plan, you see where we're highlighted in orange here. It's all storage space currently behind the lobby and the garage. And it's already approved to become a nice studio here in the back. So you would take the time, you would do your soft story retrofit while you add your ADU. And the nice thing about soft story retrofit is those costs you're able to pass those costs to your tenants, your existing tenants. 100% of the costs over 20 years. So that $75,000 can be recouped over time and do your ADU right then. So normally myself as an investor, and I think JJ would agree with this, we're always looking for value add. There's obviously wonderful, beautiful buildings you can buy that are kind of already done and you have a stable, lower cap rate, and it kind of just moves along and you get vacancies. And what I like to do is I'm always looking for some kind of value add opportunity within reason. You don't want to get buried into a money pit or a construction project you can't manage. So this fits into that mold of adding value that I think is worth doing, and there's value in it.
Josh?
Yes.
Are they representing that the storage is owner storage, or is it leased to the tenants?
She didn't mention that actually.
Okay.
I would say,
if it's rented to the tenants, it's
hard to get back.
It's a problem.
Yes.
You got to buy them out of the storage, which is ridiculous.
Yes.
But if it's owner storage and it's going to be delivered vacant, that's gold.
Right. And I would assume if they've gone this far to get it approved, that it probably is.
Probably. I would agree with that.
Yeah. So, Nob Hill, it's a, great market. There's nice upside here. So scrolling now down to the photos, all these units, like I said, 3 out of 6 are already renovated. The 4th is being renovated. Now they're vacant, and they did a really nice job. That's the other thing I'm looking for on when sellers are updating units or selling updated units. There are low end upgrades. There are middle grade and higher end. I would put on a higher end.
Those are nice.
You can see the craftsmanship. You can see the quality here. So I like that a lot. And again, this is where the exterior doesn't reflect the interior well. So by the time you buy the building, there's 4 out of 6 fully renovated, and you have an opportunity to add a 7th, obviously brand new, fully renovated unit. So a kind of nice deal here. I prefer not to do a soft story retrofit, but it also becomes a piece of negotiation with the seller. So you can ask for potentially a discount and say, hey, I have to do this work. It's going to take this long. It's hard to get permits for this type of work right now. It's tricky. So this is a nice example of an add value opportunity here, and that I'm seeing at 5 cap that normally I'm not seeing. So
definitely, I don't remember seeing 5 caps introduced directly onto the market very often, in the last year or two. So it's showing that pricing is coming down.
Yes.
Wow, that's an interesting one. That's a good one. I like that. Let me let's see. Continue. Oh wait. You want to end your screen share if you don't mind.
Yep.
There we are. Okay. So that's it for now. I mean, we don't have too much today, but Friday should be very interesting. Talking a little bit more about the legal aspects and the lawsuit that appears to be imminent regarding taking away our right to use eviction as a way to collect rent. So with that, I thank you guys for joining me. Any questions or comments or ideas or thoughts anybody wants to share? All right. Well, have a wonderful afternoon, and I'll see you Friday. Enjoy the weather, everybody. Hopefully it's as nice where you are as it is here in San Francisco. Take care. Have a good one. I'll talk to you later.
Bye,
Thanks, everyone.
everybody.
Bye.
You guys. Have a good day.